Hello, it's Joanna Torch at Family Law Cafe podcast. Today we're talking to people from London Money. London Money, two great words that go very well together. We have Martin Stewart and Kath Davison. And I think I'm going to ask Martin to say, what does London Money do?
Well, first of all, thanks for having us on here, Joanna. We are quite simply a whole of market, independent mortgage brokerage. And you're right, London Money is very simple. So when I was setting the business up originally about 12 years ago, as you do with any new business, you sit around with a pen and paper, come up with about 500 names, all of them stupid. And I was getting very frustrated. And I just thought, well, what do we do?
Yeah.
Well, we deal with money.
Yeah.
And where are we based? In London. So it made sense. Sometimes the simplest names are invariably right in front of you. So London Money just was born out of frustration, really. But it does pretty much tick the box of what we do. Doesn't mean to say that we don't work outside of London, because we do, obviously, but our office is here, so it makes sense to brand where we are geographically. And our job really is to help individuals navigate what is a very complex market in terms of borrowing money, remortgaging, raising capital. We do a bit of protection work in there as well, in terms of insurance and critical illness and things like that. But mainly it's just helping consumers navigate a very complex, fast-moving market.
Right, and we're going to come back to a lot of that because
I dare
there's
say
a
we
lot,
will.
isn't there? And Kath, is it Kath or Kathy?
Kathy.
Kathy. What's your role in the business?
Yeah, so I'm a mortgage and protection consultant. So I'm at the coalface a lot of the time. Joined in 2016 and I've not looked back since. So I'm basically at the coalface helping clients get mortgages, protection, sometimes being their counsellor as well.
We first came, certainly you were first on my radar when we're dealing with people going through a divorce, and pretty much any case where money's involved, the court is going to ask for what's called a mortgage capacity. It has to be done in a certain way, and the court will set it out in a court order. Has to be, from someone with the right qualifications. Certain information is needed. That they give you certain information is needed in that report. And what really impressed me was someone asking, we have to do, and it's always like, I've got to do it by tomorrow.
Yeah.
And you turned around this so quickly. It was comprehensive, and it really impressed me that it did everything the court asked for, because sometimes these mortgage capacities really are just not fit for purpose, or people just go online.
Yeah.
And this is such an important part of the court's decision. And, for the record, I will say I think it should be, just done in a set way, and the court should stop allowing people to just go online or say, well, I've got this, or saying, well, I've only got 2 years and I'm going to retire in 2 years, when they're 40 or something. It just doesn't make sense.
I do think there's lots of holes in the current process, which could be to the detriment of both parties and the court system itself. So I totally agree with you that some sort of proper protocol process formula needs to be in place. And one of the main reasons for that, Joanna, is that the mortgage market is so fast moving.
Yeah.
So we might do a mortgage capacity letter on Monday.
Yeah.
But by today, that number could have changed.
See,
So
I
by the time
don't
it gets to
feel
the
that the court
judge-
knows that.
No, they won't realise
Yeah.
that. They would imagine, because we don't know how the court system works, so
Yeah.
we wouldn't expect them to know how we work.
Yeah.
But it is a very fast-moving, fluid, flexible environment that we work in, which is driven by a number of factors. One is the Bank of England base rate,
Yeah.
and that didn't move today,
Yeah.
but it could move in November
Yeah.
or December.
Yeah.
And it moved in August when no one expected it to move in August. Then behind that, you have the wholesale money markets, which are in a constant state of flux. And they'll be trying to predict where the base rate might be in a year's time. And then behind that, you have lenders who need to fund the market to the consumer. And depending on a number of factors, they may undercut the market or be out of them. So all those things are moving every day, 365 days of the year. So when Kathy does a letter on Monday, by Thursday, because of all that, it could be different.
Yeah. Because the courts just ask for that at a certain, and it's usually something like 4 weeks before the final hearing. And there's just no consistency. And I take your point that even with the best report, it's going to change anyway. But I would also add to that the different types of report that, you know, one side will get and then the other side will have something different. And as a lawyer, you know, you're comparing apples and pears. So I always get in an order that the other party has the right to get a mortgage capacity for the other one. So having got their own mortgage capacity, then they see that the one that comes in looks really strange, then I say to them, get one for the other side. So just so that there's more understanding. But from what you're saying, it's very limited anyway.
And it's all outside of our control.
Yeah.
We don't control it.
Yeah.
The Bank of England control it, the wholesale money markets control it, and then individual lender criteria controls it.
Yeah.
So you've got all that on one side of the equation. On the other side, and Kathy is the expert because she's at the coalface, you've got very complicated client situations, which are also in a constant state of flux.
Let's go back to that.
Yeah.
I'll hold you there. Yeah. Because obviously, I think we can all tell from the way you're talking, you've got a background in as a financial advisor, as I understand. So how long were you in that area?
Well, I mean,
and you're still doing that, but you're specialising.
Yeah. So my financial career really is I stumbled into financial services, and you'd be hard placed to find anyone that didn't stumble into financial services. It's very much a recruitment tool. People do find a way into it and then kind of stay in it. I was originally an independent financial advisor, which was dealing on the investments and pension and taxation side. That really ultimately wasn't where I felt I was going to add a lot of value to the client. But on the mortgage side, I think, and I felt that I could.
Yeah.
So I kind of broke away from the financial advice side and moved purely into specialising in mortgages, which is where London Money came from. I don't do so much of the face-to-face like Kathy does.
Yeah.
I more sort of run the business.
Yeah.
And Kathy kind of sees the clients face-to-face. So Kathy will have a much better granular knowledge about how the lenders work and how complex client situations can be.
And Kathy, how did you come into doing
So I'm probably one of those people that actually wanted to come into financial services. I'd always been in a PA role before, happened to work for a mortgage advisor and was kind of doing her job. And I thought, well, hang on a minute, pretty much doing it. I need to get qualified. Yeah. So I qualified, you know, in my early 40s. So come quite late to actually realising what I wanted to be when I grow up. Yeah. And I haven't looked back since. And Martin became my mentor, basically took me on as a new advisor because I'm thinking, why is my phone not ringing?
Yeah.
Doesn't anybody know I'm qualified? And I haven't really looked back since 2016 and gained my experience from London Money and just being out there, as Martin said, on the coalface and just dealing with different clients every day. And still every day is a school day.
And so I'm going to ask you some really basic questions, just in case anyone watching this or listening to this will get some value from them. Just tell me, what are the types of mortgages? Let's start right there.
So types of mortgages. So are we talking products?
Oh, I don't. If I'm coming to you, I want to buy a house. I'm say like I'm getting divorced and have settled. The house is family homes being sold, and it's being sold for 650,000, and 400,000 is the equity, and that's being split evenly. Say so I have 200,000 lump sum, and I want to buy a house for as much as I can, really.
Yeah. Okay.
So obviously. And let's say I'm earning £45,000. I've been in my job and have a good credit history. Help me.
Yeah, of course. So the first step is really taking all of your personal circumstances down, all of the soft facts. Yeah. We would then just be able to tell you exactly how much you're able to borrow, what the different terms would look like, whether you'd want a fixed rate or a tracker rate, bearing in mind what's going on in the economy and the mortgage market at the moment. So a fixed rate is a product where you know your monthly repayments are not going to change during a fixed rate term. Yeah. So usually 2, 3 or 5 years. There are longer fixed rates if you want them. Yeah. And it gives clients certainty, security. But with a fixed rate comes a penalty. Yeah. So if you won the lottery the day after you bought your house and wanted to redeem your mortgage, you would have a penalty to pay.
Yeah. Early repayment penalty. Again, it's going to stop you there because often this comes up when people on their disclosure form, they're asked, if the mortgage is paid off, and is there any early repayment penalty? So that can make quite a bit of difference
Yep.
to people, and then they agree, well, let's sell the house so we don't have to lose that. So early repayment penalties, do crop up, and they're important to people's thinking.
Yeah.
But so what you're saying is the lender has allowed you, quite decent terms, but if you want to buy your way out, you're going to have to pay
You're
that.
going to have to
And
pay
that
for that privilege.
might be the right
Yeah.
thing or not.
And it normally goes down in tranches, depending on how long the fixed rate term is. But again, lenders are different. So they might just charge a flat 5% fee for a 5-year fixed rate.
Yeah.
Some go 5, 4, 3, 2, 1. So again, it's something we, as
So
part of
reducing
our
over time.
service, so it normally reduces over time.
Yeah.
But as part of our service and education, it's not just about how much you're paying each month. It's understanding all of the other terms, including early repayment, which can be, a high cost.
Most people are just like, just give me the mortgage. Am I right there? Do you find people that know what they want when they come to you, or what sort of
I mean,
knowledge they have?
first-time buyers don't, so we are sort of, holding their hands all of the way through and trying to educate them as much as possible. I think a lot of people think they know what are different types of mortgages are. They might have spoken to dad or brothers or people within the family, and the thing is, products are changing all the time. So it's really important that we kind of strip that back and really make them understand the difference between the mortgage products and everything else associated with that as well.
And I intervened. So you said you've got fixed term, and these are repayment mortgages, aren't they? Which means that you just explain that.
So again, capital repayment and interest only. So
What does that mean?
Yeah, so capital repayment means you're repaying the capital and the interest. So your mortgage liability decreases over time.
Okay.
Interest only will mean that you're not paying any of the capital back, you're just paying the interest back. So the mortgage balance never reduces. So at the end of your mortgage term, which is separate to your product rate term, an interest only balance will still be payable should you not have been paying that down by other means.
And that can really be a feature in cases I'm doing. People, maybe they don't realise, maybe just one of them's organised a mortgage, and then they find it's an interest-only mortgage. And how would that normally be repaid?
So there are different repayment methods, and lender criteria will stipulate other assets, savings, investments. Most times, and most people that I come across who have an interest-only mortgage, especially that might have been arranged sort of back in
the good old days.
The good old days, wouldn't have had any kind of repayment methods. So they will have to use their property to actually pay down and potentially downsize. So a lot of people think interest only is wonderful because it's going to make their mortgage repayments a lot smaller. But that mortgage term soon comes round, and you could find yourself having to sell your property.
So, and can I ask you, Michael, because you might be the person to ask this? Often people are in distress when, going through their divorce. So, for example, I spoke to someone that we're looking after about a month ago, and he's said, I just can't afford to keep paying this mortgage. He's actually not been in the house for a while. He's continued to pay the mortgage. It's been really decent. And it's in mediation, it's dragging on. And he's said, it was agreed that she would contribute. She hasn't. She said, I don't think I can pay it. And I said, no, please, go and talk to the mortgage company. I mean, if someone's in that position, I don't know which one of you wants to answer this, how likely is a mortgage company to listen to you?
I'd say very likely. Now, what has changed massively, I've seen this industry over 30 years. One thing that's got better for everybody is the attitude of the lender. In the old days, they were quite mercenary, quite vicious, quite quick to reach a decision, a negative one on behalf of the consumer. The client is much better protected now from a regulatory point of view, and banks are much nicer to people to deal with than you once were. It might not feel like it necessarily. The last thing the bank will want is a repossession on their hands, particularly if there is a family involved. The media are quite keen to pick up a story and lambast the lender for kicking a family out. So nobody wants that. There are lenders who will have a 13 or 14 stage process that they will go through to keep somebody in that house.
Wow.
Exactly.
Wow.
So
Didn't know
they
that.
don't want to rush and push someone out on the streets if they can find a way to work with the client.
Yeah.
We can't get involved in that because it's data protection. We only help
Yeah.
a client arrange a mortgage.
Yeah.
If they are in financial distress, if there's an issue, the first thing they should do, and you're right in what you said, Joanna, don't hide, don't put your head in the sand,
Yeah.
pick up the phone and have
Yeah.
a chat with the bank.
Yeah.
And we have helped counsel clients on that over 4 or 5 year periods
Yeah.
to speak with their lender, and they're still in the house now after that time.
Yeah.
This is such a big thing, and that's really reassuring.
It should be.
Because
It's a
people
strong message.
panic, and I think you're right. And in fact, he came back and said, yeah, he's arranged. I can't remember what the arrangements are, but we checked in and it's all fine. And the next hearing isn't until January, and I think it's for 6 months. Maybe it's for 6 months. It's going either
They will
interest
review
only.
it.
Yeah,
It won't just
Yeah.
be fine, crack on.
Yeah.
It will like, we'll keep an eye on this. One lender told us, won't name any names, but if someone's in distress and all they can afford is £50 a month, they will take that. And that will just keep the wheels moving,
yeah,
keep the mortgage live, keep them in that particular property. There's no free lunches.
Yeah.
That excess money is getting stacked onto the loan
Yeah.
at some point.
Yeah.
They're not a charity at the end of the day,
Yeah.
but they will work with their borrower
yeah.
for as long as possible to prevent a repossession.
Yep.
And coming back to Kathy then, because I was worried for him that would damage his credit status, and unfortunately sometimes cases come to me where, it's a horrible mess. People have lost their credit status from just trying to firefight and help. But what helps you get the best mortgage deal?
Again, so looking after your credit profile.
Yeah.
So there are so many people that don't actually check their own information, and we quite often have clients that come to us and haven't made any late payments, and they might have some incorrect information. They're not on the electoral roll, so it's always important to double check your credit profile, and you can do that for free. You don't actually have to pay for that. So being credit worthiness is very, very important.
And can I stop you? What affects your credit worthiness?
Yeah, so again, any late payments, utilities can even affect you. So even, I think we had a client recently, it was like an £80 late payment on a utility that has now caused a default that they didn't know about. And now, some of the high street lenders are just saying no. It can be as small as that.
Yeah.
Mobile phones.
Mobile phones is another one. Not being on the electoral roll is a huge one. So making sure your addresses are up to date and you're registered on the electoral roll. But just being in the habit of, checking your own personal information, because you just don't know what might be registered against you.
Okay. And should people, perhaps for you, Michael, be always looking, canvassing the market? I mean, there might be having a mortgage. Is it a good idea to keep sort of looking? What do people do to just stay with the same person?
There are over 10,000 different mortgage products on the market today. So if someone's got the time
Yeah.
and the inclination, crack on.
Yeah. Good
It'd be
luck.
like painting the fourth bridge. By the
Yeah.
time we got to the ends,
Yeah.
it would have changed. That's what our job as mortgage brokers are. So when I started my career, 60% of mortgage advice came through the intermediary market. The lenders still
What does that mean?
well,
Intermediary?
they use intermediaries. They came to us as experts
Right.
and deal with the bank on their behalf.
Yeah.
And the other 40% just went direct to the bank.
Yeah.
And that was in the good old days when
Yeah.
you could do that. There was a branch network.
Yeah.
They had staff on site.
Yeah.
They did everything in house. Over a period of time, cost savings in the hunt for more profit. They've changed that. And now it's probably 90% of mortgage advice comes through
Interesting.
third-party, professional, independent people like Kathy and myself. So because it is a specialist market, because it's heavily regulated, because the banks aren't now geared up to give the advice direct,
Yeah.
people like us are important.
Yeah.
And because we have the systems, we can tell clients straight away what the best rate is. Some people will go online and go, I've seen it online, I've seen this rate. Okay. 99% of people that do that do not end up getting that rate.
That's it, isn't it? I mean, I was, it happens to us all the time. People say, I've seen this online, and you kind of look at, and then you look at it. No, it doesn't mean that. Or you know,
The headline race.
check,
It's
yeah,
Yeah.
It grabs. It's clickbait. It grabs
Yeah.
people's attention.
yeah,
The minutiae of mortgage criteria is huge, and we see people with very, very good credit profiles who don't qualify for the very best mortgages for lots of different reasons. Before we even got into complexity of income, or everyone that we see now has a PCP car payment.
right.
That's a-
Is that a good thing or bad?
It's kind of both, because it means
Right.
you've got a credit profile,
Okay.
but it's bad because it means £500 a month of your income is spent with Land Rover, and therefore you can't
Yeah,
use
yeah,
that for
of course,
mortgage
that's-
purposes.
Yeah.
So it's a
It's-
commitment. So
yeah, yeah,
it's a bit of both. But
Yeah.
school fees are a big one. Childcare costs a big one. General cost of living is a huge.
So that would, so if you've got a commitment to school fees, obviously that's going to mean you've got that commitment. It's not going to be available to pay your mortgage.
No? But there are
Absolutely.
lenders that can work with you if you've got grandparents that contribute, or if you've got some funds that are ring fenced.
Yeah.
So it just takes the burden off the income multiple. There are different, and that's where advisors come in. We kind of know.
So ring fence money. Yeah, I hadn't thought of that.
Yeah, so the advisor will know, or should know, the best way to extract the maximum income multiple on the provider the client can afford to make the monthly payments.
Yeah, I mean, it just brings me into mind. I remember it's such a long time ago now, and I can remember how distressed my mother was having, you know, she always worked, but after her divorce, she wanted to. These were the days when people got hired video, you know. What do we have in those old days? You know, when we had cassettes for videos, didn't we? You know,
Oh, the video, like Blockbusters.
yeah. And so we had a video machine. You know, people rented televisions then, didn't they? And I think she wanted either rent a television or something.
Radio
And
rentals.
of course, because, you know, she'd always been married, they just wouldn't allow her to. And it was just such a base. We'd always lived really well. And it just sticks out of my mind that she had no credit profile. This was such a long time ago. And of course, you know, I just remember her calling me. She was so distressed that, you know, it was just as if she didn't count, that she couldn't get something as, I can't remember, as I say, if she was renting a television or
I'm sure it wasn't that long ago where single women couldn't borrow money.
yeah.
So at least we've got progress in some
Yeah.
respects.
Well, I mean, it was that, you know, that she became a single woman and had no status, couldn't borrow money. And, you know, my parents had, you know, we'd had a family business, been really successful. And so she'd always had, and she'd worked, and they both worked really hard, but she was treated in that way
Wow.
as a woman. It's just shocking, really.
It's really shocking. It's almost as though she had no kind of footprint at all
Yeah.
financially.
Yeah, she didn't. Yeah, no.
We have seen an interesting trend over recent years, though, where the woman is the primary earner.
Mm.
We've seen a reversal
Definitely,
in
yeah,
that
I'm seeing
to a
that,
degree
yeah,
now, where
yeah.
women are much more successful. They've got a career,
Yeah.
and you might. I'm not saying they're all stay-at-home husbands, but they might have a lesser income that means they can do more of the childcare. So that
Yeah.
real flip
Definitely, yeah.
is much more obvious.
Yeah.
Complex then from a divorce point of view.
Mm-hmm.
In the old days, it's probably a little bit easier to work out the finances.
Yeah.
I think nowadays it's much more complex, and we end up in a situation, we've seen this quite recently, where some families they cannot afford to separate.
Definitely, that's such a big feature, that people are sort of locked into their marriage. I mean, it's really, really common. Certainly, cases that come to me, either they come to me saying, you know, we've been living separately the last 7 years or something, you know, in the same house. And it seems to go in waves. You know, in my practice, it obviously depends on the economy, where people just say, we just cannot afford to sell, we cannot afford to move. I mean, how is that? Are you finding? I'm not sure. I've definitely had times when that's been a bigger feature than now, but is that something that you come across?
It is. It is at times,
Yeah.
yeah. And it's quite worrying, isn't it, for these people that they can't actually kind of get on with their own lives because they are so financially tied and they've
Yeah.
literally got nowhere to go. So, you know,
We've also had
we work with these people for quite a long
Yeah.
time, don't we?
Yeah. So do you take people that they might not be able to get a mortgage initially, and then over time you find a way? Is that
I
what
hold a
happens?
personal record at London Money,
Yeah.
counselling someone for 15 years
Yes.
before they're in a position to buy. Luckily, this summer they've just moved in.
Wow.
Just that's a very rare example.
Yeah.
But we've spoken to someone recently, 4 years.
4 years,
and
yeah.
So, people's situations don't necessarily align at the right time for them.
Yeah.
So, we'll speak to people. And
Yeah.
a lot of our job is, as Kathy said at the start, was counselling.
Yeah.
Just wait until you're ready. And, it's not always about product. I know we talked about products and product terms. That's the last thing we talk about.
Yes.
Yeah.
First thing is why. Why are you doing it?
Why are you doing it? Yeah.
What's the reason for it? What's the motivation?
Yeah.
Talk about the emotional side of it, because property is very intrinsically linked with emotion.
Yeah.
So let's talk about that bit first.
Yeah.
And the product's the last thing we talk about.
Yeah.
And that's where maybe the consumers changed a little bit. They've always just think, oh, how much can I borrow?
Yeah.
It's not always about that. It's why you're borrowing it.
I really didn't expect you to say that. That's kind of thrown me a little bit.
Well, good.
Yeah, it has. Because, I think of I'm not sure I'm not going to speak for everyone. But I think of mortgage brokers, okay, hey guy on the phone, and it's something like an 80s thing almost, isn't it? Yeah, guys, get me the mortgage. Yeah, I want to buy 3 flats in Leicester and get it done.
Don't get me wrong, Joanna, there will be brokers like that
Yes.
out there, but that's not us. We're very much a people business.
Yeah.
Yeah.
And we like to deal with individuals.
Yeah.
And we'll walk away from something if it's not right for them as a consumer
Yeah.
or us as a business. You're only good as your last transaction.
Yeah.
So we have to be very careful. We are heavily regulated.
Yeah.
There's lots of stuff we have to do before we can even tell a client what to do.
Yeah.
And the problem you've got is that we have built this society based on consumerism
Yeah.
now. And you were talking about your mum.
Yeah.
And renting a television was a big financial commitment to her.
Yeah.
Now people just get £80,000 cars
Yeah.
because they can.
Amazing, isn't it? Sometimes you walk along, quite a sort of modest, a row of quite modest houses, and everyone's got these amazing cars.
Their driveway is worth more than their house.
Yes.
And that it overcomplicates everything. And really, we should be working out how we borrow less money
Yeah.
rather than borrowing as much money as possible. So, that's where kind of a good financial advice process comes into play.
Yeah.
And that's why we start with the why first
Yeah.
and end up with the product at the end, because you might not actually end up with that product or any products.
Very true.
I'm sorry, I'm a little bit lost for words here. I'm talking to mortgage advisors who are saying no, maybe
Who say don't borrow money.
don't
Borrow money
Borrow money sensibly
unless it makes sense.
and
Yeah.
for the right reason.
Yeah.
And if you do, the chances are you've probably done it right.
Yeah.
The ones that have made the mistakes are the ones, and they're coming. We see a bit more of them now, where they thought that the 0.5% base rate that we had for 15 years was the new norm, and then we had the quasi budget 2 years ago.
Tell me about that. As mortgage people, who wants to go first?
I think I messaged you one morning when it came on the news. It was pre the Trustonomics. Mortgage rates are going to hit 6%, and I was like, no, like we were, and they blinking did, and did they, and they stuck. So it was a great sort of learning curve for us, because we actually became counsellors, because we had families on the phone remortgaging, literally in tears, like, how am I going to afford my mortgage? So we did become quite a huge counselling service over that, and I think we're pretty good mortgage brokers to have stuck through it, and we're still here, busier than ever.
Yeah, I mean, it's hard to put that into evidence, but there are a lot of brokers that did suffer in a 2-year period, and rightly so, because they might have been specialists and they might have been doing that Gordon Gekko on the phone, buy, sell, we haven't seen a massive downturn in our business. It's not grown, but it hasn't gone backwards. So we're plateauing.
Yeah.
And that's the sign of progress, I think. When you're in a industry
Stable.
specific recession like we were, where the lenders retracted, that's always a bad sign. When lenders go, we're not lending any money.
Well, that was what was happening, wasn't it, around that
Effectively.
time? And obviously that had its effect in people getting divorced and whether they could remortgage. I actually remember, when was it? Was it Black Monday? than the mortgage. I'm looking at you, Martin.
Not that
I am that old. I just remember my brother saying that he was driving his car listening to the radio and hearing mortgage rates go up and up to 15%, I think.
Oh well,
then.
that would have been the early late 80s, early 90s. That was there was a number of Black Mondays over that period of time. We've had a few since as well. Then we've had the credit crunch in 2008,
Yeah.
which is brutal.
Which I remember very well with divorce.
For a lot of people.
Yeah.
Then we had COVID. That was very detrimental for the market for a short period of time.
Yes.
And then we've had Trustonomics since. So the lesson there is choose your advisor carefully. You don't want someone that's only seen success.
Yeah.
You need that person that's seen a lot of failure
Yeah.
across that time.
Yeah.
And it's also a compliment to the housing market and the lending market that it will always come through downturns. It will always come out the other side.
Yeah.
Might take a couple of years,
Yeah.
but it will always come through. Because I've been through most of those cycles, and every cycle I go, this is the end. It's never coming back, but it always does.
Yeah, I'm just going back then, obviously, because hopefully anyone watching or listening to this can remember, those moments of Trustonomics and the impact, the craziness, and really what's been happening in the last 2 years. It has been really quite tricky. I mean, what I've noticed, I think it's right, isn't it? It's not getting any quicker to get a mortgage, is it? It seems to be. Why is this? Because, surely with algorithms and all, you'd think things got quicker, and a bit like in family law, things seem to take longer when we've got the availability of, email, everything else. Why is it taking longer?
This is where people forget that separate it out. There's the mortgage, and then there's the buying process.
Yeah.
And they're two separate entities.
Yeah.
The mortgage can be relatively straightforward.
Yeah.
And it can be done sometimes within 2 weeks.
Really?
Sooner. But then you've got the conveyancing legal process, and that really isn't fit for purpose.
Yeah.
So it's still very antiquated. It's document heavy. It's process heavy. It's anything that involves the civil service at some point is going to suffer a slowdown. And I think there's a bit of a brain drain in conveyancing. I think a lot of people have left conveyancing. So I think that is the problem. Is more.
So it's not getting the mortgage then.
I don't want to make it sound easy, and Kathy will at the coalface will tell me that's not always the case.
Yeah.
But from a process point of view, generally on average it takes 3 months to buy a house.
Yeah.
Within that first month, you've probably got the mortgage.
Oh, yes. I would be worried if you hadn't.
Yeah. Because often in cases I'm dealing with, one party is buying out the other, so they want to remortgage, and the court usually allows about 3 or 4 months. Would that be reasonable for a remortgage?
I mean, one would hope so, but again, you're relying on so many other parties, so it's not just getting the finance, working with the mortgage lenders. As you say, you're also relying on the solicitors' firms. Sometimes with a mortgage product, you'll get what's called a free legal service, which is fabulous because it saves you money, but it can be quite a drawn-out process. So there can quite often be delays. I mean, 4 months, I would like to think that, yes, it would go through then, but it can take longer.
Just depends how amicable it is as well, Joanna. You don't know who you've married until you divorce them, is a phrase I've heard quite recently. And I've got a couple of clients that are going through that. And, it starts off quite nice, but it's not long before it moves into Kramer versus Kramer. And everyone's...
The first letter always says, that's why I don't advise people take that linear approach. I'd rather them just come to me and just get to grips with it all at the beginning and just have an understanding and then just get a strategy. Because, obviously there are divorces, people just have become best friends and they just want to go their separate ways. But there's going to be some, even then, they're going to have different aims. So it's just unfair to expect that it's just always going to be easy. It won't be. I mean, all those letters always start with, let's be amicable, and you just know when you see that, okay, let's just see how far that goes. And you want to be. It's not that parties don't want to be there, but there'll always be something new coming up, and it just becomes, life isn't like that. It's more complex.
Someone who went through a very, very big divorce, and 2 bits of advice they said don't hide anything. So transparency,
Yeah.
honesty is the best policy,
Yeah.
and don't get the other side angry, which I thought was very
All good.
Yeah.
valid.
Yeah.
So get those two bits right,
Yeah,
and you might
yeah.
end up with
And interconnected, really, aren't they? I mean, obviously, it's just takes so much longer when people. I mean, it's pretty difficult to hide assets now, and it's kind of just annoying.
Well, yeah,
Why are they
it's a
doing
waste
this?
of time,
Have-
isn't it?
have you not
Surely.
heard? It's just craziness. So, it's lovely to speak to both of you. What's for the future?
Keep on carrying
Well,
on, I think,
hopefully,
isn't it?
hopefully no more dodgy budgets would be
Yes,
quite nice.
fingers
no
crossed.
more house price crashing. No more credit crunches. No more lockdowns. Just a little
Yeah.
little bit of peace and quiet.
A little
would be quite
bit
nice.
normality, I think,
Yeah.
would be good, wouldn't it?
Things, yeah. So not too many events, that are always can cause difficulty. But then, Marty, as you say, just take the long view, I suppose, if something like that happens.
Life's a lottery. It's not predestined. There will be another disaster at some point, and we'll just be there at the end of the phone,
We will.
ready to cope.
We'll still be there.
So I'll still be there. I'm not getting out.
All right, so great to talk to you. I know you've got about 12 people working for you. I know how great you are. Really love working with you, and it's really been a pleasure talking to you.
Oh, and you,
just
Joanna, thank
you know all your stuff, and you're caring, and a mortgage company that says, really be sensible with your borrowing. I mean, what more can we ask for?
But also, just the final point there is we talked about a lot about jargon.
Yeah.
We don't like jargon ourselves.
No.
Our industry is terrible. You might see
Yeah.
this in the legal
Yeah.
profession. Why use these big words?
Yeah.
No one's interested in them,
No.
and we don't use them ourselves. So
Yeah.
I think that's why we're quite successful. Is that
Yeah.
we dumb it down to our level, and that generally helps the consumer.
you. Comes over very
I'm
well.
totally of that view, and you've got to be really smart to make it simple. To make things simple, you've got to know your stuff, and you two do. You know all of the detail, and then you take the time to listen to people and actually help them, which is kind of what we're all here for. So
Excellent.
Fabulous.
fantastic.
Thank you.
Thank you.